This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on Thursday, February 19th, 2015. Harold has a speaking engagement to high net worth individuals tomorrow, so we are taping the show on Thursday. Remember, if you ever miss a radio show, they are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. Subscribe to the podcast. It will come in automatically every week. You can listen to it on your portable device at your leisure. Our radio show is portable. We go anywhere you do. Speak personally and privately about investing in hard assets, diamonds, gold, and silver. Harold's website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number is 1-800-432-1022. 1-800-432-1022. As we tape today's show, Greece has come forward and asked for a 6-month loan extension, a request for an extension of the existing bailout. Germany has said, no, we're not interested in that. More talks will come. Also, a record, and you can see this in our free weekly newsletter you can get from Harold, a record 3,415 Americans gave up citizenship. It's part of FACTA, Foreign Account Tax Compliance Act. Foreign banks must reveal Americans with accounts of $50,000. It was interesting. A friend of mine, his wife was visiting Edmonton, had lunch with her. She's an American. She gave up her citizenship. It just did not make financial sense to keep it. The Fed in the United States, the minutes came out. They plan on keeping rates at zero longer than originally was anticipated, which is not a surprise to our radio show. Also, U.S. government research says J.P. Morgan is America's riskiest bank. Retail sales plunged twice as much as expected. Worst back-to-back drop since October 2009. So in December and January, major drop. Also, Americans are not using the savings from lower gas prices to go out and buy. They're saving the money and they're buying more gasoline. Also, one of the big issues in the United States, student loans. Student loan delinquencies are rising in the United States, and that is a troubling sign, as if you're loaded down with debt, you're not going to be buying a car, or you're not going to be buying a house or starting a life. It's a huge consideration. Also, Russia, the former largest foreign investor there, Vladimir Putin, is worth $200 billion. He has definitely padded his nest quite nicely. Hackers stole, if you can believe it, from 100 banks. They rigged ATMs to spew cash. They're saying they probably got away about $1 billion. That according to Kaspersky Lab. And Harold, this was one that was quite scary. A huge spy program exposed. The NSA has hidden software in hard drives around the world. The U.S. National Security Agency has figured out how to hide spy software deep within hard drives made by Western Digital, Seagate, Toshiba, and other top manufacturers. It's quite frightening to hear that what we already knew, Big Brother is definitely keeping tabs on all of us. And then, as you were saying off air, geopolitically, things have been very crazy again this week with ISIS. It's just a very, very crazy time in the world, financially and geopolitically. And as we always say, that's why we want an allocation of hard assets, diamonds, gold, and silver.
You bet, Randy. It's a very, very dangerous time. And the stock market, again, here in the United States, it's hovering right at around 18,000, but there's very strong indications that all is not well here in the United States. And again, we know it's being supported, but the feeling is that that market could drop substantially. In actual fact, a lot of the markets just don't make a lot of sense at this point. You got to get the newsletter this week. It's just loaded with great information. A lot of information on the manipulation on gold and silver and where that's heading. So at this point, as we're taping the show, gold's down 280, and it's sitting just above the $1,200 level. So gold has been in a decline again. Silver is trading basically down about 10 cents, and we're now down below the $17 level. We're trading at $16.59. Even though long-term we're bullish on gold and silver, we do feel that gold and silver are going to drop further due to the fact that the dollar is still very strong. In fact, if you look at the U.S. dollar at this point, it's trading at 94.29, up 20 points on the day, and that puts other currencies, down substantially. The Canadian dollar is down about 25 cents. So it's basically trading from about a year ago when it was pretty well level with the U.S. dollar. It's really dropped off substantially. The euro, as we know what happened, because it got down to the 120 level, and then what was supposed to happen was that in Switzerland they were supposed to support the euro at the 120 level, and they shocked everybody because they said that they were going to do that. Then at the last minute, they decided to sell the euro, not support it, raise their currency, and take their interest rates negative by 0.75% in the banks. It shocked everybody, and within 1/2 an hour, the Swiss franc went up 30% in 1/2 an hour, and the euro dropped the equivalent amount. It's trading right now between 112 and 113, which is the lowest price the euro has ever been at. So again, we've got these manipulative markets going on. The banks have been fined billions of dollars for manipulating these markets, but they still continue to do so. And the fact is that it is going to wreak havoc on the financial markets. All the paper asset markets, that is not where you want to have your money. At this particular point, you want to be in assets that you hold yourself, that you own outright. You don't want to leverage anything, because leverage can work for you and work against you. In most cases, leverage works against you, and you don't want to be in leverage at this point in the metals, in stocks, in bonds, in commodities, anything at this point. Unless you're an expert trader, the chances are you're going to lose all your money if you're leveraged in this market. And you certainly don't want to leverage gold at this particular point, because with gold sitting at about 1,200, my indication is that gold's going to drop to around 1,000. I've gone back to the late 1970s to see a very similar pattern that's happening in the gold and silver market that seems to be happening at this particular point. And if you don't learn from history, history will always repeat itself. We feel very strong at this point that due to the strength of the U.S. dollar, which again, the only reason that the U.S. dollar is strong is that the other foreign currency markets are weak. It's not that people have that much faith in the U.S. currency at this point. It's actually the opposite, that they have very little faith in the other currency markets, especially with what's happening in Europe. So at this particular point, if you're leveraged and gold drops to 1,000, you're going to be in trouble. You're going to have to come up with additional money, and that's not what you should be doing at this point. You shouldn't be trading in the precious metals or commodities or the stock markets if you don't know what you're doing. You should be buying physically and holding it. And again, even though we do believe that gold is going to drop further due to what's happening in the currency markets, we're still extremely bullish on gold. In actual fact, we're probably more bullish long-term in gold than we've ever been before. We know that the debts in the United States and now in Europe and now in Japan are extreme and could be never ever paid back. So where does all this money go to? The fact is that these countries continue to print money and incur, more debt, and their economies are almost stagnant. What's happening in Greece and Europe at this point is almost unprecedented. What's happening in the United States, you would think that with lower oil prices, the economy would improve, but it's not, because Americans are so behind the eight ball financially, and they don't trust the government at this point, that they're not spending money for the first time. Anytime Americans have ever had a windfall, get their taxes back or a rebate from the government, whatever. They always went out and spent that money. They bought TVs and appliances and cars and that type of thing. That's not happening right now. They're taking the money, and for the first time, they're being smart about it and trying to pay off debt and put money into the bank. So, again, at this particular point, the markets are a mess. We don't trust the stock market in any way, shape, or form. I haven't had any money invested in stocks since 1999. Did I miss the biggest bull market of all time when the Dow went from basically 14,000 down to 8,000? And then down to 6,500, now all the way back up to 18,000. The reason I don't participate in the stock market, because it makes no sense. There is no way in the world that an 18,000 Dow reflects the U.S. economy. Retail sales have dropped 2 months in a row. The fact is that unemployment is probably closer to 20% than it is to the bogus 5.7% number that the government is feeding us. Most people do not have faith in President Obama or the government in general. And then you add to it all these other situations that are happening worldwide financially, and then this incredible ISIS situation. I mean, these people are the most barbaric people on earth, and to behead the people and to burn that pilot, I mean, is just unconscionable, and this is what's going on in the world today. And the worse the financial situation gets, the more of these situations will pop up. But we don't have to be in that situation. The fact is that if we're smart about how we invest our money, we don't need to lose all of our money in these markets. You need to be able to weigh the risk and reward ratio and see what's right for you and what's not right for you. And if the feeling in the market is that the Dow is going to plummet and it could happen at any time, you don't want to be in it. You just don't want to be in a market that we could wake up one morning and find that you've lost all your money in it. So the fact is that, you know, you want to be very careful with paper assets. There's no way in the world that the Dow is supposed to be at the 18,000 level. If it wasn't a manipulated market, there is no way in the world it would be at 18,000. It would be at closer to 9 or 10,000, and that's where the market should be at this particular point. So what do we do moving forward? We sit back and wait for the markets to come to us. That's what we need to do. You know, when I first recommended gold back about 15 years ago when it was at $250, it was not a popular recommendation. Fortunately, a lot of my clients that have dealt with me over the years believed in that trade, and we made an awful lot of money in gold. But the fact is that we don't trade that market. We buy and hold it for a specific reason, because the reasons are going to become apparent very, very soon. You buy gold because of currency devaluation for the same reason that you buy diamonds, for currency devaluation and for the potential of inflation, and again, what's occurring in the marketplaces right now. So you hold on to these assets. You don't trade them. You don't buy and sell and try to pick tops and bottoms. It's nearly impossible to do that. You buy gold at a price that you're comfortable with, realizing that gold has the potential to triple from where it is right now. And again, I know that leverage sounds attractive to people when the market's going up, but believe me, these markets can be so volatile that the market can give to you, but it can also take away. So again, my feeling is that we're going to see a pullback in gold that will continue. As much as I hate to say so, I believe gold is going to go to around $1,000, which would basically bring us back to the levels that we saw percentage-wise back in 1978 and 79 before the market took that monumental run and gold went up 800% in just a few months, and so did silver. So that's where we sit at this point. I'm buying and holding gold. Very soon we will, again, and it's a lengthy process. I know I've been talking about this to you for the last couple of months, but to be an importer of gold is a very, very big deal, and it takes months and months and months to accomplish that particular feat. Not only do you have to work out your deal and you have to get your importer's license, but the scrutiny you need to go through with Homeland Security, because gold and diamonds are two markets that are used for money laundering. So basically, the regulators really have to check you out in order for you to be in that business. Now, I've been in this business for 35 years. We're going for our importer's license, which we should get at almost any time, and hopefully it will come before this move in gold starts to move higher. I believe that we're going to see another massive bull market in gold, but it's going to be a very, very fast-moving market. It's going to be similar to the market that we saw in 1980 when the market dropped, and then when nobody was expecting, absolutely skyrocketed and went up 800% in just a few months, and I do believe we're going to have a very similar market to that. Also, as we're taping the show, look what's happening in oil. Oil is now down $2.20 on the day. It's broken down below the $50 level. It's at $49.94. Now, the fact is that oil is more than likely going to continue to drop because of huge oversupplies in the oil market. So with oil prices dropping, and we should see a retest of the 44.50 level in crude, and that could happen fairly quickly. Then after that, it would not shock me to see oil drop down to around the $35 level. That will wipe out most of the producers of oil. You're going to see that a lot of the rigs have shut down already. They're not refining as much oil, but there's a massive supply of oil on the market. So that's got to come out of the market before the oil market can move further. And what's also going to happen is these smaller countries that produce oil and depend on oil for their livelihood are going to go bankrupt. These smaller OPEC and non-OPEC members are nations that produce oil, and that's where they make all of their money, are now losing a fortune, and there's no way in the world they're going to be able to stay in business. So if we see oil come down to $30, $35 and wipes out everybody out of the oil market, that oversupply is going to be gone. And then you're going to see a run in oil that's going to take you back up over $100. And that's what we see. I've traded oil for 35 years, and I've been through some of the most unbelievable moves in oil that you've ever seen, and this is only one additional one to deal with. I know the oil market well, and again, we're just going to have to bide our time and wait for this market to reverse. But when it does reverse, it's going to be one of the biggest moves you've ever seen. So all in all, Randy, I see volatility in the markets. I see continued pullbacks for the short term, but then we see a complete turnaround in the market coming, and we see stocks dropping substantially and gold hitting highs that nobody dreamed possible before. And we do see oil eventually going back over 100. It's just got to go lower before that happens.
This week's featured diamond from rarecoloreddiamonds.com. We have another one. It's spectacular, 0.38 carat fancy gray-blue oval argyle. See a picture of it online at rarecoloreddiamonds.com, featured diamond of the week. We have a picture of it in our newsletter as well. Later in the show, we will talk about diamonds. A 100-carat emerald-cut diamond is headed for auction in April. Sotheby's is saying it could fetch anywhere from $19 to $25 million. Learn about investing in hard assets, diamonds, gold, and silver. RareColoredDiamonds.com is the website, the portal to go to. You'll see the world's finest museum-quality investment diamonds there. You can speak personally and privately with Harold about the investment opportunities that he has. He'll be happy to educate you about some of the potential of, obviously, investing in naturally fancy-colored diamonds, rare-colored diamonds, and there is a loose diamond investment as well. He'll talk about that later in the show. 1-800-432-1022, 1-800-432-1022, and coming up soon, we will have auctions, more auctions from hsfineauctions.com. Harold will touch on his auction website as well a little later in the show. A great quote this week from Jim Rickards. It was originally from Daniel Patrick Moynihan, who is a member of Congress in the United States. You're entitled to your own opinion. You're not entitled to your own facts. And that's one of the things that we've always tried to do on our radio show, is be as factual as possible. We're not optimists or pessimists. We are realists. And we've been criticized for being doom and gloom at times, but the truth of the matter is we're just trying to be realistic based on what we are seeing that we're putting together in our free weekly newsletter, The Facts. Frank Holmes says, the market for gold coins and bars in Europe is now twice as large as that of the United States and similarly on par with those of China and India. In addition, the India Trade Ministry is said to be seeking to cut the gold import tax from 10 to 2%. Obviously, that would spur more sales of gold. Frank Holmes says, with new global mined gold supply averaging about 258 tons per month, and with 255 tons of gold withdrawals from the Shanghai Gold Exchange in January, China is effectively consuming all of the world's new mine supply. Doug Nolan said this week, after 6 years of unprecedented central bank monetary measures, the end is still nowhere in sight. The highly abnormal has become the enduring normal. Indeed, the global monetary backdrop gets crazier by the week, and everyone's fine with it. Federal Reserve policy making is now celebrated as an indisputable success, testament to what injected $3.6 trillion of new money into securities markets can accomplish. And each week, the world seems a bit closer to coming completely unglued financially. John Hathaway was speaking about Greece this week, and he said the situation with Greece is tricky. And you would think a small country like Greece, how could they put a monkey wrench into the whole Eurozone? Obviously, the finances of various countries in Europe are intermingled, and extraditing and basically getting Greece out of the Eurozone is going to be very, very difficult. Easier said than done. John Embry from Sprout Asset Management said the latest U.S. jobs report was an insult to anyone with an IQ over that of a grapefruit. This is all part of the policy of the United States, and the U.S. dollar must be supported at all costs. The illusion of a strong U.S. economy and the inevitability of an administered rate hike are all part of the con. But the rubbish can only be peddled for so long, and then eventually the piper must be paid. When that happens, the COMEX gold and silver paper markets will be revealed with as basically massive Ponzi schemes that they are, and that's the last thing the authorities want people to see. Thus, the day of reckoning will be postponed as long as humanly possible. All of the financial innovations that now make global financial markets totally unstable have allowed the Ponzi scheme to go on far longer than any rational mind can grasp. However, this will just make the ultimate day of reckoning that much worse. When the day of reckoning arrives, and it will arrive this year, the bond market will be exposed at one of the greatest bubbles in human history. Thus, it remains essential that investors have substantial exposure to gold and silver, irrespective of their irrational short-term price action driven by desperate people attempting to delude the public. You want to hold hard assets. And Harold, we have about 30 seconds left here in our first segment.
Well, again, it just makes sense at this point here to hold on to your assets, to hold them physically. Again, not everybody's going to do that. I know people certainly trade the stock markets for several reasons. Tax reasons, potential profit, the 401ks, retirement savings plans, everything. All we're saying is be very, very careful. There's a lot of risk in that market at this point, and it's not at the level it should be. It should be much lower. And again, we feel that that is very strong possibility going forward. So all we're saying at this point, be very cautious if you're trading the paper markets.
Our featured diamond of the week is a .38 carat fancy gray blue oval argyle. And you can see it at rarecoloreddiamonds.com, featured diamond of the week. We'll talk about that diamond more in specific. Also, a 100-carat emerald-cut diamond is up for auction. We'll talk about that too, and we'll do it after the break coming up. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call and speak with him personally and privately at 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, will continue right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 19th, 2015. It's a Thursday. Harold has an engagement where he will be speaking with high net worth individuals tomorrow. That's why we are taping the show today. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. You can speak with him personally and privately at 1-800-432-1022. Harold's auction website is hsfineauctions.com. Ever miss a radio show? They are archived on Herald's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Have iTunes on your portable device. Type in The World Financial Report on radio. We are there. Subscribe to the podcast. The shows come in for you to listen to at your convenience every week. rarecoloreddiamonds.com. That is the world's #1 website for museum-quality investment rare diamonds. And we have another one. I don't know how Herald does it, but every week our featured diamond just seems to top the week before. It is a .38 carat fancy gray blue oval argyle. And you may say to yourself, gray blue? I don't know about that. Well, take a look at it. Go to rarecoloreddiamonds.com right now, featured diamond of the week, and click on the link. You're going to see one of the most stunning diamonds I think I've ever seen. And the color, when they come together, the color gray and blue, it is a stunning, stunning diamond. And of course, it's an argyle, and within a very short period of time, 3 or 4 years, the argyle mine will be shutting down. An extremely rare 100-carat emerald-cut diamond is heading to auction, the auction block in April. Sotheby's auction house said it could fetch anywhere between 19 and 25 million. The diamond's current owner, who remains anonymous, spent over a year studying, cutting, and polishing a rough 200-carat diamond to deliver the perfect stone. And some believe this is the perfect diamond. The color is whiter than white. It's free of any internal imperfections and so transparent that you can, as they're saying here, that I can only compare it to a pool of icy water. It is the first truly emerald-cut diamond over 100 carats to be offered at auction, the most classic of cuts, quietly elegant and very contemporary, according to Gary Schuler, head of Sotheby's Jewelry Department in New York. The diamond will be exhibited in Dubai, Los Angeles, Hong Kong, London, Doha, before heading back to New York City on April the 17th. It will be auctioned off April 21st. We have pictures of the diamond in our newsletter in Herald. When you see the rough diamond, as I was saying to you off air, and all the planning and timing and just everything that goes into the cutting of this diamond, then you see the finished result. The cutters are artisans. They just do a stunning, stunning job, and this diamond is really, truly one of the world's finest diamonds.
It certainly is. Now, they're not giving the color, but it certainly looks like it's a D, which is colorless. Over 100 carats is obviously ridiculously rare. The fact that it's an emerald cut, I've got to agree with them. We have a 100 carat plus round, brilliant D, flawless type 2A diamond that is also the same, transparent and the best that you could possibly get, but I've never seen an emerald cut of this particular size and clarity. So it's obviously a D flawless. It's obviously a type 2A, because if it's that transparent, it means it has no nitrogen in it, and it is one of the rarest diamonds. I would be shocked if that diamond didn't sell for over 35 to 40 million. So I think that they're underplaying what that diamond should sell for, because the fact is that it should sell for over $30 million. It's one of the world's most amazing diamonds, and I just can't wait to see what that diamond is going to sell for. As far as our diamond, our featured diamond, it's one of the exotic argyles, and to get an exotic argyle today is extremely difficult. We all know that argyle produces the most beautiful pink diamonds in the world, but they also produce very, very rare and magnificent exotic diamonds, and that's what this particular one is. The fact is that a blue-gray is a very, very rare color, which most of us have never seen before. So the fact is that I have 3 of these. We just got very fortunate when we got our delivery from Argyle, and these 3 diamonds happened to be there. I'm thinking it was a reward for the great job that we've done for Argyle, because, again, very, very seldom do those diamonds ever come on the marketplace, just like you'll hardly ever see a violet Argyle also, in which we have 1 or 2 of those. So the fact is that diamonds are in the news for a very specific reason. They're portable private wealth. With more Americans leaving the United States more so than ever any other time in history, you understand that diamonds are that type of asset. They're portable private wealth. You could carry a $30 million diamond like this particular emerald cut that's going to come up for auction. That could be in the cuff of your jeans. It could be in the pocket of your slacks. It could be in the pocket of your jacket. That's the way diamonds have been transported all this time. And if you own the diamond and have the receipts that you own it, it can be transported anywhere. They're portable private wealth that the government just doesn't know about. They may know about how much gold you hold or how much you hold in stocks or how much you paid in taxes over the last few years or what your company is doing, but they could never tell what you have in the diamond market. It's just not something that's on the radar. So the fact is that diamonds are doing tremendously well. You know, I saw a show the other day, Randy, on CNBC, and they were talking about the fact that they now have a machine that will make diamonds through extreme pressure, that they can make diamonds in this factory. Now, we've known that this has existed, but they've taken it to another level. And the fact is that the representative that they had on was very enthusiastic and saying that you could never tell the difference between a diamond that comes from the ground as natural, that's cut and polished by a cutter and GIA certified and all that type of thing, and you cannot tell the difference between a diamond that is made in a laboratory under extreme pressure. But the fact is this, is that the diamond market is very, very specific. And by the way, the prices on these man-made diamonds were not that much different than the prices of natural diamonds. So I don't see the point of why somebody would want to own something that's not natural, that's man-made, versus what's very valuable in a natural diamond. You know, it's very similar to somebody getting a machine that can exactly duplicate a Picasso or a Rembrandt or a Monet. You know that it wasn't painted by the artist, so it doesn't hold the same value. And here's the most important thing. The GIA, the Gemological Institute of America, which grades all natural diamonds. So when a diamond comes out of the ground as a rough diamond, it's sold to a cutter and a polisher who will cut and polish the diamond. Then they send that diamond to New York to the Gemological Institute of America, known as GIA. And they do a full grading report on that diamond. It tells you the dimensions in millimeters. It tells you the color. It tells you the clarity. It tells you the carat weight. It tells you everything about the diamond. And that's what GIA does. Now, they also know the cutters, meaning that if somebody was to walk in, or let's say, for example, my company was to go to GIA and give them a 5-carat blue diamond that we cut and polish, they know who we are. We've dealt with them for decades now. They know my company. They know who the cutters are. They know the history on the diamond as a rough, and they know where the diamond came from, so they would have no problem grading that diamond. But if somebody walks in off the street and they have a diamond that's cut and polished, and they want GIA to grade it, the GIA is going to say to them, well, where did that diamond come from, and who cut that diamond, and what mine did it come from, and how much rough was it cut from, before they would even talk about grading that diamond. So the fact is that none of these diamonds that are man-made could ever be graded by GIA. It will never, ever happen. So those diamonds have no value. Their value is simply as jewelry or as costume jewelry, because the fact is that they're not natural. It would be like, how much would a Picasso be worth if it was duplicated by a machine instead of the master Picasso? It's nowhere near, not worth anywhere close to what a natural diamond would be worth or what the actual artist's painting would be worth. So again, that is not a fear in the diamond market in any way, shape, or form. Nobody who's in the diamond business is concerned that they're making diamonds in a laboratory. It doesn't mean anything to the natural diamond market. In fact, what it does is solidifies that investment even more, because it goes to show how difficult it is to get an extremely rare natural diamond. So the fact is that the diamond market is doing tremendously well. And one of the major reasons why you want to own a diamond is because of currency devaluation. So think about this. My Canadian clients have been buying diamonds from me for, let's say, for the last 10 years. And the fact is that diamonds go up in value. But let's say, for example, the diamond stayed at the exact price that it was. You paid $20,000 for the diamond, and it's still at $20,000. But the fact is that the American dollar has strengthened over the Canadian dollar by 25%. So what does that mean? It means that you've made 25% just on the currency alone. That's why diamonds are such a phenomenal investment. That's why my clients that own all these Argyle pink diamonds that we put away until the mine closes are not only going to see tremendous appreciation on the diamond, but as long as the U.S. dollar remains strong over the Canadian and other currencies, the fact is that these diamonds go up in value and the currency makes them even more expensive. So it's a phenomenal win-win situation. And again, it's something that is extremely exciting, and again, a true representation as to why you want to own diamonds, because they could be sold in other currencies. We could sell diamonds in England and still pick up British pounds, which are the strongest currency in the world at this point. So again, I love what's happening in the diamond market. I love the fact that the Argyle mine is closing, because most of my clients own Argyle pink diamonds. It's not that it's a mass market. You can never mass market that. You can't sell thousands of Argyle pink diamonds. They don't exist. Only 200 carats a year exist, and aside from what my clients buy as investment quality diamonds, the fact is that most of those diamonds are bought by jewelers who put them into pieces of jewelry that are sold. They don't come back on the market for decades because they're handed down from generation to generation. So again, I think we're in a very, very unique situation. I think this is something that we started 10 years ago that nobody ever did before. Everybody in the diamond business knows that diamonds are good investments, but there was never a secondary market to resell them, and that's what we built. The only secondary market to resell diamonds in the world today. And it's getting more and more popular, and we're building it, but it is a business that takes a long time to build. You have to build a clientele of extremely wealthy clients that are able to buy these diamonds down the road, and that's where our major concentration is. Fortunately, at this point here, diamonds are a buy and hold. Nobody wants to sell diamonds at this point because, again, the Argyle mine is about to close in less than 5 years, and our big payday is coming. We anticipate that these diamonds will go up 200, 300, 400, 500 to 1,000% over the next 7 to 10 years. You'll never make that type of money in any other investment. And again, these assets never decline in value because there's so few of them. So I just think we're in a golden position. I think we're in a great position in diamonds to buy and hold them at this point. Give us an opportunity to build our auction business. The fact is that we're dealing with charities now because charities introduce us to very wealthy clients, and they are the clients that can afford to buy our diamonds. 75% of Americans live paycheck to paycheck. They're not my target market. My market are very wealthy families that buy these type of assets because they've always bought these type of assets. Because we've built H. Siegel Fine Auctions, we're the company of choice because they feel comfortable that they'll be able to sell the diamonds through us down the road. At this particular point, I think the diamonds are one of the most important assets that you could ever own. They're portable private, they're a hedge against currency devaluation, which is happening all over the world right now, and they can make you a lot of money moving forward. And again, the yellow flawless diamonds, you want to hold on to those. You want to hold on to those because there's very few of them on the market today, and we want them to become extinct. We don't want any of them in the market, so when we go to auction them off, we can get top dollar for our clients. Don't forget, we are the only company that only makes a profit when our clients make a profit. When you sell your diamonds through us, we get 10% of the profit, and our clients get the rest. So if we don't make you money, we don't make money ourselves. Give us an opportunity to build our diamond business and our auction business, and you're going to be very, very pleased with the results are going to be. We have major auctions coming up in the month of March. We have auctions coming up with a major charity, a children's cancer charity out of California, and in combination with that is going to be a classic car auction. Husband and wives are both going to be involved. We're going to be offering Ferraris and diamonds. It's one of the most exciting things that is happening to my business. Then on top of that, for the Girl Scouts of America, which is one of the biggest charities in the world, with some of the top leaders in the world being women, and most of them attributing a lot of that success to the Girl Scouts of America. We're having an auction for them on March the 19th, and it's going to be sensational. So, again, we have two major charity auctions coming up, and we are planning some auctions for our Canadian clients moving forward. We're going to be doing an exotic Argyle auction, and it's going to be all in Canadian dollars. So, again, we've got a lot of exciting things moving forward. One other thing is, with as low as interest rates are right now, we have another business that has been in operation for 3 generations, going on 4 now, and it's our rough diamond mining business. Now, again, we offer this to our Canadian clients, and it's a very, very high payout. And the fact is that, it actually sounds like one of those deals that's too good to be true, but I can assure you that this has been a business that's been in operation for generations now through my partner's family in Venezuela and South America. They're mine owners, and they wanted to expand that part of the business, and I brought it into the 21st century. I included my Canadian clients. They've invested money into the mining business, and they get a 24% return U.S. on their money every year. If you've lost money in any other markets, if you lost money in gold or silver, I can make that money back for you in 4 years on a very simple basis. If you want to learn how to make 24% return on your money U.S., give me a call. I'll explain it all to you. It's a very safe investment. Sure, I could borrow money at 3 or 4% and expand the money and make all the money ourselves. But I've always included my Canadian clients because they've been with me throughout my entire career. And it's something that I've always done, and I like to give back. So if that's of interest to you, if you want to learn more about how to make 24% on your money or how to double your money in less than 4 years, I'll show you how to do that. Just give us a call. But all in all, the Argyle mine is about to close. 5 years from now or less, these diamonds are skyrocketing in price, but you still have an opportunity to get in at a good value and make an awful lot of money moving forward. Again, Randy, we're just ecstatic about what's happening in the diamond market at a time when all other markets are unreliable and very, very volatile.
Our featured diamond of the week, and it is just an amazing diamond. When you hear the color gray-blue, take a look at it at rarecoloreddiamonds.com. Featured diamond of the week. It's a 0.38 carat fancy gray-blue oval Argyle. When you see this diamond and the color that it exudes, you're going to be definitely entranced. Get our free weekly newsletter from Harold. Speak with Harold at 1-800-432-1022 or connect with him at rarecoloreddiamonds.com. Read that story about the rare 100-carat emerald-cut diamond. They say that it could sell from anywhere from $19 to $25 million. It's going to be on sale April 21st, and that is according to Sotheby's. Harold believes that it could go for a lot more. One of the articles that we do have is Diamonds, Timeless Gems in a Changing World, and it was put together by Bain & Company. And it's really talking about the Far East being Asia, also India, and how in those countries they are going to start, and it's already started, they are going to start purchasing diamonds in large amounts. They've always purchased gold. They're moving into the diamond market. There's a scarcity of diamonds as it is when it comes to rare-colored diamonds, lack of new mines being found, and this means that the prices will go up in the future. Get our free weekly newsletter. We can send it out to you. Diamonds, Timeless Gems in a Changing World. And we also have, from Harold's company, Diamante Atelier, the holiday catalog. And this holiday catalog is stunning. Some of the items there you want to see. They are must-sees and possible investments for your portfolio. Harold, one thing we did not talk about on today's show, and we should, it's the Lunar New Year celebrations, and we wish our Asian friends, Chinese friends, a Happy New Year. It is the year of the sheep, and I know that there's a bit of a differentiation between goat and sheep, but we'll go with sheep. But it's the year of the sheep, so we say Happy New Year to our Asian friends. And I know that a lot of people of Asian descent, Harold, they are really seeing diamonds as a place to invest their money beyond gold.
Yes, they certainly do. The Asians are, and by the way, I agree with you, it's a very happy time for them, Happy New Year. But the fact is that They buy hard assets. They buy gold. They buy diamonds. They want to own their own assets. And again, that's extremely important, and we should follow that suit because, again, you need to diversify and you need to own the assets and hold on to them. We live in a crazy world right now. We can't necessarily trust the banks. Look what the banks are doing. They're actually going to charge us. What's happening in Europe right now, and what just happened in Switzerland, where they're charging 0.75%, so they've got negative equity in the bank, they're charging negative interest rates, that will be here soon. That means that we're going to have to pay to keep our money in the bank. That makes absolutely no sense because we know that the banks are underinsured and they're not safe, and we saw what happened back just a few years ago. So all in all, you want to own your assets. You want to be able to hold on to them just in case you need them. And again, diamonds, gold, physically is the way to go because that's where the markets are heading.
If you keep an eye on the numbers, the economic numbers coming out of the United States, over the past couple of weeks, the numbers that are coming out are not good. They have not been making their numbers. So you take a look at what's happening, as Harold was touching on, with negative interest rates, and you see what's happening in Greece, 50% youth unemployment, 25% adult unemployment. They're in a situation with this new government in place trying to negotiate a new bailout and obviously try and somehow pay off the money that they owe, although some believe eventually they will have to leave the Eurozone. And what will that do? We think that that's another reason why you want to own hard assets. But Europe in general is in financial difficulty. So now is a time for hard assets. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The U.S. is, their economy is starting to roll over. We see it all around the world. rarecoloreddiamonds.com. Featured diamond of the week is a .38 carat fancy gray blue oval argyle. .38 carat fancy gray blue oval argyle. We know the story of the Argyle mine, and we know that the Argyle mine will be shut down in a few years. And when that mine does shut down, obviously we believe there's going to be great price appreciation on the diamonds from that mine. Harold will be giving a speech tomorrow to high net worth individuals, and in the past he has been on Fox Business News, Bloomberg Radio, and on the Jerry Bovino Show. And if you would like to see those interviews, if you really want to get to know the man Harold Siegel, watch the Jerry Bovino interview. We have them in our newsletter. Click on the links. It will take you to the interviews. If you'd like to see Harold in the national media spotlight, we have those interviews for you. And Harold, we have about 3 minutes left, but one of the things that's very concerning right now is, in my opinion, is what's happening in Greece. And here you have a small little country similar to Cyprus, and yet it's really shaking the foundations of the financial world, which seems in some ways to be absolutely crazy considering they're so small.
You bet, and that's what they're saying, but the fact is that they pack a powerful punch, and again, if they go off the euro, I just think it's going to start a chain reaction, because it's not only Greece that's in this trouble. We know that Italy and Spain and Portugal and Germany and France and all of them are in trouble. So it's only a matter of time until Europe really goes into a severe recession. In fact, they're pretty well there now. So again, right now it's Greece in the news, but the fact is that there's several countries that are just on the verge of what Greece is going through now, and it's just not going to be a pretty picture. That's why you want to own assets that you hold yourself that are not related to paper, and it's a very, very important time to do that.
You know, Harold, as we've said on our radio show earlier, a quote from Daniel Patrick Moynihan. Jim Rickards was in a debate this week talking about the United States and how the United States as a country is doing. He doesn't believe they're doing well. And one of the things he quoted was the quote from Daniel Patrick Moynihan, the former U.S. politician. You're entitled to your own opinion. You're not entitled to your own facts. And one of the things that we've always been very careful of here is trying to get the facts correct by doing a lot of fact-checking, digging, and finding stories. They're in our free weekly newsletter. You can get them through Harold by connecting with him at rarecoloreddiamonds.com or calling 1-800-432-1022. It's not about optimism or pessimism, really, in the times we're living in. It's about realism. And Harold, once again, thank you for all your knowledge and another great show. And good luck tomorrow as you speak to those high net worth individuals.
Thank you very much, Randy. I wish everybody a wonderful weekend and a very, very profitable day.
Speak with Harold about investing in diamonds. Start your own diamond investment portfolio today or add to your portfolio. We have a diamond that is perfect as a starter diamond or something to add to that portfolio that you do not have, and that is a .38 carat fancy blue-gray oval argyle. Speak with Harold about it. Connect with him at rarecoloreddiamonds.com or 1-800-432-1022. There it is, another show, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.